There we go. Okay, it's fine. Where do I go to see if there's anyone here? Okay. Looks like we have- If you guys have any comments or questions, go ahead and type in the chat. It's not showing me how many subscribers are in or viewers. But if you're here, yeah, go ahead and say something in the chat. That way I know. Okay, let's get to the total moving average. This one. Right there. Yeah, leave a like and subscribe if you're here. It's hard to tell if there's actually anyone here. percent. That's awesome. Bitcoin is bouncing back. Looks like I'm gonna be right. It's bouncing between these fib levels here. On this 0.5, and now we're at the 0.382, which is actually bullish. Very, very bullish. With that candle closed right at the 0.382, and we open up above. So I'm looking for some sort of rebound here in the market. Yeah, we could have some sort of kind of fluctuation between here and the 0.236 for some time, and a little bit of move higher, fluctuation, and then move higher. That's what I'm mostly expecting. The other scenario is that we just range bound for a few weeks, like we did in 2017. So this is what we did in 2017. In 2017 here, we moved up significantly. I don't know what the percentage gain is. This actually isn't as important because you're starting with low numbers, so it doesn't make sense to actually capture the percentage gain here and compare it. It's not the same, mathematically speaking. So, but what we did do structurally, it's going to be very similar. This actually looks very similar to what we've just done. So we had this multi-week up move, right, followed by a large down move. And then we traded sideways. It's a little different, but bear with me for a second. So we traded sideways, just like we did for the last 3 months, dipped below the 20-week moving average. This is the simple moving average. So it's actually a little bit, it doesn't move as quickly as the EMA. The EMA stays, a little bit more current to the current price. So if the current price moves down quicker, the EMA is going to move down exponentially as quick. So anyways, it closed down below the 20-week EMA, SMA, and then it stayed there for 7 weeks, and then we surged higher. But if you notice, it's not like we just dumped down 80%, right? What happened is we closed down the 20-week, that 1 week candle right there. That was the bloodiest, right? That's the reddest. And there's, interesting, I'm looking at the volume down here. There's some very interesting similarities here. And I think we're going to do the same exact thing. This next candle was a green candle, which is what I think is going to occur here. Obviously, this candle is going to close probably red in the next couple days, which is fine. It's not the end of the world. The next week, I think we're going to have a green volume candle just like this right here. That's going to signify that the bull run this next week, not this week closing now, the next week. So in 9 days from now. That green candle, and we've already confirmed it on the daily. The daily confirmed the green candle on the subsequent day after that large drop, after we fell 40%. That's going to signify the rest of the bull market. I know that sounds crazy, but the signal is that powerful. The volume with the price action, the day after, and then the week, that's confirmatory, and it's going to be so strong of a signal that these subsequent candles, you see how they're smaller, right? It won't matter if they're red, green. It doesn't matter what color these subsequent candles are. They're going to trend a little bit sideways or up, and that's fine because that's what you want to see. It's this most immediate candle after the bloodbath has occurred, after the capitulation, which is what we witnessed on the 19th. That was total capitulation. 8 to $10 billion of leverage was wiped out. 775,000 traders were wiped out. So we're going to see confirmation here on the current BTC chart, and I can fast forward to now. So just remember here, actually, let's do a little side screen. Let me pull it up. Candles. Let's zoom in. This is the EMA, so it's not like for like. Let's close that out. It's at SMA. I mean, they're going to be close enough. SMA. Let's tick off all the other ones that we don't need. So don't need that, that, that. Don't need that, don't need that, don't need that, don't need that, and don't need that. I'll make these the same color, orange. Oh, fuck it. Let's do the same colors down. Blue, and thick, and thick. Okay. Let's zoom in here. Boom, 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 boom. So this is a daily. Let's move this one to daily too. This is weekly. That's daily. Let's readjust. Oh, motherfucker. Hang on a second. 2015, go to, boom. Take me there, baby. There we go. So this is the same thing we were just looking at. Let me make sure here. Make sure yeah. That was my one circle. It should have stayed. Whatever. This is the same thing we were just looking at. It's just on a daily candle now. So highlight that. It looks a little bit more gruesome. And back then it was, right? Because you're dealing with, there wasn't, okay, A, there wasn't that much supply. B, there weren't that many traders and investors back then. So if one guy sold his entire wallet, I mean, you're going to see a big red dildo like that. So you're going to see a lot more volatility. But what's interesting is the market psychology is basically the same, right? You still have the same incentives of gaining and earning a return and preventing losses, right? All that, market psychology 101, that still existed back then. It's just on a bigger scale in terms of percentage moves. Whereas here you have more players, more supply, but same thing at the end of the day. It's kind of like statistics. If you've ever taken any advanced level statistics courses, if you the sample of a small set is basically the same of a population, and that's what we've got going on here. So sorry, I'm on my Mac. So what is similar here, let me bring up volume. You're going to notice, see here, this big green candle, as long as and it was, thank God, thank fucking God. See how it was taller than the red candle today on the volume. It doesn't matter what this red volume, this one, it's obviously capitulation. You can't do anything about that. It's the most subsequent day, what that closes at. That is the most important candle of the entire bull market. The entire bull market. The entire history of Bitcoin probably at this point, because let's be honest, we're in present time. So if you notice here, we're going to draw some similarities. What do you notice? What do you notice, guys? Green volume candle. Green volume candle. Day after the capitulation wick under the 20-week SMA. Green. Now, these other candles don't matter. It doesn't matter that we had this other red candle here that was larger than this one. It's the most subsequent day after the initial capitulation or the 20-week SMA that matters most. As long as this green volume candle is taller, it's a signal that the bull market's going to continue on, and we're going to have, and you notice here there was a double bottom. What do we have here? Hopefully it's a double bottom. We'll see. it could turn out to be like some sort of, M pattern or something like that. You kind of have a shoulder looking M and then a higher, a higher high, and then you kind of get above the SMA and you trend, kind of like what you did here. You trend, and then ultimately trend. Ultimately, what happens? And you eventually come back to an new all-time high. I don't think it takes as long as what we saw here in 2013, because back then there wasn't global awareness. There's local market dynamics at play, so it takes longer for things to probably play out. I think what's going to happen is it's going to be a fractal of what happened in 2013, and it's going to happen sooner, the new all-time high. And I don't mean you're going to have I think we're going to have a couple peaks. I think we're going to have an interim high and then the blow off top high, which is what we saw in 2013. So I do think we recover here in present time. We'll recapture this 20-week SMA, which is important. Trend sideways. Altcoins are going to have a massive rally while Bitcoin's trending sideways on top of this 20-week SMA, by the way. And then you're going to have a blow off top either in 2021, or what a lot of people are theorizing now is that we're going to have this market extensioning cycle where 2022 will be the new all-time high. It's hard to say what's going to happen, but I'm leaning towards 2021 being the end. I think relying on this lengthening theory that Bitcoin's going to have a longer market cycle, I think you need to be very cautious about it if that is your view, right, of the world. Because if you view that's going to happen and you miss out on the top, then right, you're going to have an 85% bear market. So something to be cognizant of. Let's see how chat's doing. So it looks like I have one person watching, I think. Okay, cool. Someone's watching, but this is my first view on a live stream. This will get better with time, guys, obviously. It's my first time live streaming, so obviously, I'm not going to have a lot of viewers in the beginning. I only have 12 subscribers right now, so. But what I'll do is I'll post this. If I can condense the beginning part where I wasn't talking, I'll cut that out, and then I'll just post this, the analysis part. So anyways, what I'm theorizing is that we're going to dip down, just to recap. We're going to come back, take the 20-week SMA, trend sideways. The FUD that China put on the market, by the way, was total manipulation. So the fact that we're not going below, let me show you the fib zones here, these fib retracements is vital. So the fact that we tested this 1618 extension here, right? The fact that we tested this and didn't close below it was very important. With all the FUD that's coming in today, yesterday, the day before, I think if they can't make it fall any further with all the FUD that they just put in the system, and the fact we're rebounding back up 37,750, to me, that's a clear bullish indication. We're going to continue this bull run. They can't manipulate it lower than 30K. I mean, they could if they really wanted to, but you'd have to crash the NASDAQ too, along with it. And they're just not willing to go there. So, right now we're sitting on top of this. It looks like, yeah, that's awesome, by the way. We're sitting on top of this 0.382 fib retracement zone. So to me, it's good, right? You're moving up the zones, which is positive, versus moving down the extension zones, which would be obviously extremely bearish. So the fact that we're sitting here, and you can see these are significant levels. I mean, as much as you may not look at TA, it is vital, right? You see, look at this here, where this green candle closed and opened, right? And where it actually ultimately went down to. It tested the 0.5 level structure here with the wick, but then, and even down to the 618. And then it came back, closed above the 0.5, which is vital, right? Or right above the 382. The next candle opens right on the 382. I mean, these levels are extremely, extremely important, which is why I've got my fib extension targets drawn here, right? So the first fib extension target that we're going to hit is the 1. That's your first main target. Is going to be the 100% level, right? So that's at 49K BTC. That's the ultimate. There's a lot of traders talking about 42K, 43K, 45K and whatnot. Yeah, those are important, like short-term targets, but long-term, this 49K is extremely crucial. And look where it lines up with, guys. It's just magical how fib works. It lines up 1, 2, 3, 4, 5. And if we go back here, 6, 7, look at all these different candles that close, these 4-hour candles that close and tested on it. There's just tons and tons of confluence here at this 100% level, this fib extension level, 49K. This to me is the line in the sand. Not the line, I don't want to say that. It's not the line in the sand, but it's the ultimate next target that we're going to head to. Bitcoin will test it, come down, probably break through, test again, right? The structure as support. So going through, it's going to be resistance, come through, then you're going to test the support, and then you're going to hit the 1618, right? 1618, which is at 57K. Then it's similar move. You're going to have probably a rejection, breakthrough, test, upside move, right? To the 2618, which is at 70K. And then on and on and on, right? Until we eventually get, in my opinion, here to the 3618. We'll probably have a big dumpage there. And then you'll come back up. We'll fall. It'll be FUD again, or Facebook DM will come out. And if Facebook DM comes out with 3 billion subscribers to Facebook, the market's just going to go bonkers. So China FUD won't matter then. And that's why China is probably trying to FUD as much as they can right now, because they know their cards are weak. They hold Deuce 7 offsuit right now, if you know any poker references. That's what they're holding right now. And so that's why they're FUDing now, because they know there's going to be some bullish catalysts coming in the future. And when those do come, there's just not going to be any stopping Bitcoin and the crypto market in general. And to be honest, this sell-off was actually really good. Not in terms for your portfolio or your positioning, but for the overall general health of the market structure, because you had a lot of these stupid meme coins that just went nuts. They went parabolic. There was no rhyme or reason. There's no fundamentals behind them, and they just went higher and higher, right? And people were, making money off of it. But as you see now, Shiba Inu is down 85%. 85%, guys. That's why it's important to always follow the fundamentally valuable projects. And those are the only projects that I really post about on TradingView, right? So coins like Compound, Ethereum, Phantom, FTM, right? Fetch, AI, ONT is another good one. These are all fundamentally sound projects, right? So it's important to be in coins that have use cases, adoption, and fundamentally sound ideas. Because they do matter. They do actually matter. Yeah, you might not see them pump as much, as these meme coins, but eventually value is discovered, right? And money chases valuable things, right? As you know, in a market crash, what happened to the money in those markets for Shiba Inu and some of these other, meme coins like PooCoin and whoever knows what the fuck these coins are? What did they do? Ultimately, they all crashed 80-90%. They already did a bear market in a matter of 2 days. So the fact that liquidity and value is draining from them shows you, that those are the bubbles. The bubbles aren't, Bitcoin's not a bubble. The coins that are a bubble are the ones that don't have any fundamentally valuable use cases behind them. So I think, let me see how many people have streaming with me or watching. If you have any questions, just let me know. But I think I'm going to end the stream for now, just to call it a wraps as a first stream. But I do want to go over actually one more coin before I sign off here. So one coin that I do like a lot, in addition to Phantom, I do like Phantom. I like Ramp. I like Badao. Is Compound. I think this is a very fundamentally sound, very fundamentally valuable project. They've got like $14 billion of value locked. Their market cap's only like 2.5 billion. It's a very similar project to Aave, if you've heard of Aave. It's a DeFi project where you can basically borrow, lend, lock and stake, do all sorts of different DeFi, characteristics that you'd expect. Except it's more of like a professional, like custody level. It's very like when you go onto their website, it feels like you're on a professional grade level, like Goldman Sachs custody. Like it feels very professional. So, which is why they have so much money locked into it, because it is. And they've got tons of venture capital backing, right? They have Bain Capital, Andreas and Horowitz. They have tons of VCs invested into it, and you never hear anything about it. It's the funny thing is, no one talks anything about Compound actually. But anyways, this is one I like a lot. It did just post this hash ribbon signal on the 17th, just when Ethereum did it too. Not every coin has posted this, by the way, guys. Bitcoin has not posted this yet. If you look, you can go to current day. Let's bring in the hash ribbons. Hash, boom, bring that. See, it has not posted a blue buy signal yet. It's posted this neon green capitulation circle on the 18th, or 17th, which is important because that's the final green circle that gets filled before you do get the blue circle. The reason why you don't see the green one here is because it coincides on the same day as the blue. Now, Compound posted a second buy signal on the 25th of April. That wasn't that long ago, right? So you have two buy signals within a month, within 30 days of each other. To me, this is going to go absolutely bonkers. All I did here was just extrapolate the same percentage move from the last buy signal all the way here back in December 2020 to May 2021, which was 344%. So if we do the same move, which could be stronger in my opinion because you have two buy signals here in a short period of time. But anyways, if we're just being conservative, just take the last percentage gain, extrapolate it out. Compound's going to go to 2236 in the relatively near term. These signals are near-term signals. They're not long-term indicators. These are very short-term signals, like within 30 to 60 days. Typically, they play out with an extreme up move. So I'm looking at Compound to rebound significantly over the next, call it a month. By the end of June, I think we could see this ease. I know it sounds crazy to say now because we're in a bear market, not in a bear market. We're in a sell-off. I think we could easily see 2236 within the next 30 days. And now, I think other coins, it's going to take a lot longer to recover. For instance, Bitcoin. Bitcoin's not going to do a 344% gain. It's not going to do a major move, right? So, which would literally put Bitcoin at like over 100K. We're not going to see that in the next 30 days. We will see that, and I think projects that, again, this is only 2.5 billion market cap. So you have to remember the economic inertia to move this coin is a lot less than to move Bitcoin, right? You have one billionaire come into Compound, right? It's going to move the coin several 100%. So, and I'm just giving that as an example. I'm not saying a billionaire is going to do that, but you could break it down any way you want. Several millionaires, right, that equal a billionaire. Same thing. You're going to have a major move in this coin because it performed flawlessly in the sell-off. Everyone expected DeFi to get destroyed and to like fail, and for all the algorithms and all the automatic stabilizers to fail completely. They didn't. Compound didn't fail. No one. There weren't these mass liquidations on Compound like everyone was predicting. Would happen on these DeFi protocols. Nothing major happened. It acted as it should have. It stabilized. And in fact, the reason why I like Compound even more is it bounced off the 200-day moving average, whereas other coins are below it. I think Polkadot's one that's below their 200-day moving average. I don't quote me on that. I can take a look. But they're below, whereas Compound touched it and bounced off. You can see it was a very strong signal. It was like when the wick is that big after touching it, it's a very strong indication that you're going to reverse, right? 200 days is a very massive indicator. And this is the 21 EMA, this thick blue line, which is below right now still. Let's see where we're at currently. right? So we're still above the 200-day. We bounced off. I drew this out earlier. I can redraw the fib lines if I get some more viewers right now. I think I only have a few. Let's see. Yeah, I have a few right now. Anyways, let me close that. Okay. So right now, Compound itself, it's going to find itself in a similar market structure as Bitcoin in the short run, right? Everything follows Bitcoin when Bitcoin's selling off. So everything's hypersensitized to Bitcoin in a sell-off. And it's going to take a few days for Compound to break out and to basically, separate from Bitcoin. And it will happen. So Bitcoin's going to rise up, and then once it stabilizes, you're just going to see Compound. Instead of it stabilizing, it's just going to keep going up, right? And that's partly to do with this buy signal. It's partly to do because it's an altcoin. It's partly to do, that it's only 2.5 billion market cap. Ethereum's going to do something similar. Obviously, it's not going to be as big of a move as Compound because Compound's got, again, the smaller market cap. Ethereum's I don't know what Ethereum's now, 300 billion. It's a major, multi-hundred billion market cap coin. It's going to take a lot of economic inertia to move it. Ethereum will go back to all-time highs, but it's not going to, 4x, right, like this coin is. So I'm going to leave it here. I'm going to go ahead and end the live stream, guys. It was good chatting with you. And we'll do another one of these tomorrow, and I'll try to make it a little bit, more standardized and consistent. But yeah, it was good talking to you guys. I will see about how I can end this. You're probably going to see me here for a few more seconds. Let's see. Go ahead and stop screen. Disable camera. Probably still